Bitcoin's all over the place. Big liquidations hitting and gold's breaking records. What's driving all this? After briefly touching 118,000, it's now holding closer to 112,000. That's the push and pull of crypto. Long-term optimism is being powered by ETF inflows and anticipation of the next halving cycle. At the same time, short-term risks like heavy leverage, thin liquidity, and a still hawkish macro backdrop are keeping the market on edge. Meanwhile, gold's record surge shows some capital is still preferring safety. For crypto, that means Bitcoin's digital gold story is now competing head-to-head with the real thing. In the past 24 hours, we saw just how fragile sentiment can be. More than 1.5 billion in leverage positions were liquidated, sparking sharp intraday swings. Bitcoin briefly slipped under 112,000 before bouncing back, while Ethereum fell even harder. Crowded longs and shallow order books amplified every move. For investors, the takeaway is clear. In crypto, sentiment and leverage often drive short-term action more than fundamentals. Thin liquidity outside the top exchanges magnifies volatility, and one-sided positioning can flip fast. Still, the big picture hasn't cracked. Institutional flows remain strong, adoption narratives are intact, and Bitcoin's supply dynamics continue to support long-term upside. But in the near term, crypto remains highly sensitive to both macro currents and its own structural stresses. On the positive side, some see the recent drop as a healthy correction or a washout of overconfidence, possibly setting the stage for a more stable consolidation. Historically, September hasn't been kind to Bitcoin. It's closed down in 9 of the past 12 years. Between pre-Q4 tax loss moves and typical seasonal swings, it's hard to tell if we're seeing an average September dip or the start of something bigger. What's your take? Average pullback or major shift? Drop your thoughts in the comments.